Hello everyone, petar.jacimovic here from Analysis.com. I want to post the update after the news yesterday. We got the cut rate for Europe and also expansion QE program. So we got a massive activity there after the release, and I want to speak more about that part and what we may expect in the next few days and so on. So on the euro and on GBP USD. Pretty much I closed New Zealand US dollar just to do the update for the my positions from yesterday. I closed this, and I closed due to inactivity and indecision after the selling climax. 2 days we are pretty much trading into this trading range, so it's very risky to hold this position. Even though there is a massive selling climax, it still can be a massive sign of the weakness, especially when this massive supply came in from the top and we broke this we pretty much broke this strong resistance, which became support once it's broken here. So it's confirming very strong. Potentially supply came in. Well, it's a higher chance then the buyers will come here on something like that, especially again this selling climax happened on the from the top, and this is something like massive uptrust bar, so it's more likely that this will continue lower, and the good indication for continuation the lower will be if we break this trading range, and that may confirm further lower prices on the New Zealand dollar, US dollar. So I will wait for potential opportunity and try potentially to establish some positions here if I see them. This will happen. So price must confirm this. I will not enter before this, because price can go in the trading range for a days before we see the breakout. So I will rather wait the breakout and sell on some no demands here on this currency pair. Now we will move to the EUR/USD currency pair, which I think it can bring me very good return and so on. I have the right now 3 positions. I will explain more about this, my positioning after the news release. First of all, we got the cut rate. Yesterday we didn't. Cut rate means that weaker currency, basically, economically, if we say like that. Cut rate and together with expansion in the QE program. What happened yesterday is basically the crowd reacted totally aggressively here. They bought as much they can. Some of the traders still buying this and think this will explode higher or something like that because of this massive upward movement from the yesterday. But actually, as we know, the weakness appears on the up bars, especially on the ultra wide spread bar, ultra wide range bars, in the ultra high volumes, as like we got here. Because if we, for example, go to the 4-hour time frame, you can see the bar of like 300 pips on a 4-hour time frame. This is like 3 times average in just 4-hour bar. What is this? This is absolutely reaction from the news, taking the many stop loss orders here and so on for the people who don't control the risk or even don't have stop loss or trading the news. Pretty much these actions on the interest rate decision, pretty much a lot of traders lost money and so on, and a lot of traders will lose because of this massive they think demand came in, the massive demand. But this is actually very speculative nature upward movement, and what I did is actually I waited to see what will happen when the price will stabilize, when we will define the cluster, when the price will find the resistance, and then wait the big demands and no demand bars on uptrust to establish my selling positions. Because again, due to the in professional trading, again weakness appears on the up bars and good selling positions happens near some big activity on some liquidity. Exactly what we got here. This is a classic example. So what happened here? Okay, so news came in, cut rate expansion, ECB, it's a very good actually for lowering euro. So if you watch just a pure fundamental view, Anyway, the price reaction totally opposite. The first reaction, the first few hours yesterday was totally opposite, and price really exploded here, about 400 pips movement in the 1 day. That's a massive buying climax. It was also climax on the futures market. We got about 100k traded contracts there in that candle. It's an ultra wide range of the bar and the ultra high volume. So we cannot sell again. This is a just first warning for potential distribution and potential professional selling. We must wait for price to stabilize and that sellers, and that we see that there is no any more interest for buying side, so we can clearly sell there, put a stop loss. I already secured my USD positions from yesterday. I have a 2 selling positions from 1.1185. Why there? I established that pretty much on the Asia session. I established my first selling positions. First of all, I tried to catch the best price. I waited the price to stabilize. Price found the resistance, and that's what I like to see. So price found the resistance there. So I started my first selling positions here with 0.5% risk each one. Now, the Jesse Livermore rule, for example, in the investing is you want to add positions into the good winning transaction. Once you see that the price is going in your way, and you also establish a position because of the strong background, you can add on every rally and every on every rally further on, because until we see the sign of potential strength coming in or something like that. So far I didn't saw that, so I keep selling. I add position here. So I will not add more than 2 positions in a day. So what actually happened, I established it yesterday, let's say yesterday Asia session, when the Asia session started. But I wake up, I see that what the London session did, and we went lower. So I like the moment, it's going good progress. So you add into the winning position, you add positions. Okay, you don't you don't put larger size than you to put the average size you're doing, or even lower. For example, if his risk is 0.5% in the original sizing, you can put 0.3 or the same 0.5, but you can put 0.3, 0.2, depend on the adding positions. Why you add? Because it's a very simple rule. You don't want to you want to add positions when something is going correctly. One thing also, why I closed the New Zealand dollar, one of the facts also I closed, not just because this can be a potential redistribution by Richard Bykov and we got a massive supply. I don't like what happened in the next 2 days. Usually, if something is good, it will be good from the very start. This is so much noise here. We are in the trading range, so skipping position buying here because of this selling climax, and I think this will potentially absorb this. Price action didn't prove this, and you can just lose time and money being in this position. So that's one of the reasons I closed. So again, you must watch clearly what's going on in the market and adapt to the market. Okay. For example, British Pound USD. I will look potentially to close my position. I have 2 positions here. Pretty much the same reason like we got on the EUR USD, but there is one big difference. The EUR USD, starting from this early morning, dropped about 90 pips, and it's still going, still having the sign of the weak demands. So clearly the process of distribution is in place here, and pretty much I will add positions. For example, if I see the Monday, we see also some rally and some weakness coming in. After the rally, I will add 1 more position, and I will add as long I don't have the big sign of strength in place, or also I will pretty much try to close all my positions before the Fed cash rate decision next week. So I will not hold position just like that. I will cash everything if this go like I planned. So I will have I will help 2 days next week to try to earn as much as possible for the large event, which is the interest rate decision for US. Also, one thing why the euro is going lower and while the euro is weaker than the GBP is pretty much this. The reason is they got a pretty much similar, let's say they have the similar price action. You know, we also got the buying climatic action, price stabilize here, price found the resistance there. We don't see any large demand there, and so on and so on. But I don't expect from pound anything. And first of all, I see the very next day, today, there is no much progress in this setup, which means that pretty much they are waiting the cash rate decision, interest rate decision for United Kingdom next week. So they will, you know, investors and any large investor will not take any position 2 days or 3 days before the release for the GBP. Later, yes, depend of what we'll see on the price section, on the activity and so on. But right now, you cannot expect, and I will watch to close my position for 6-7 pips, close bot positions, and I will have only Euro USD setups running 3 transactions on the Euro USD. Again, why the euro? Because euro showed the progress, because euro got interest rate decision yesterday, because the reason is that interest rate decision, United Kingdom didn't got that. We are awaiting. Investors are pretty much fear to do anything here. We can see the lower price, but not. I don't expect too much from this trading range, to be honest. Inside of this trading range, up and downs, yeah, but nothing too big here nothing big will happen here before the release for the interest rate decision in United Kingdom. That's the reason why I will wait that release and then decide what I will do, depend on the price action, again, activity, again, according to technical view. So far, I will look to close this one. So right now, pretty much, what's the best thing to do? It's to sell the EURUSD on every rally, on every no demand, on every uptrust on the 15-30 minutes, for example, intraday. And you can sell all the way. Price can really drop. What I'm expecting that this can easily happen is we can even go 100, 200 pips before the US interest rate decision. And then if there is a lot of sellers after the US interest rate decision, the price can totally absorb this buying climax. Again, weakness appears on the up bars, especially on the ultra widespread up bars and ultra high volume bars. So having in mind that and following the progress of this, it's a very good. Okay, so right now, for example, I have the 2 positions active right now in plus like 90 pips. So I have 2 positions with 90 pips profit so far, and I sold, actually I will show you the exact area where I sold. I sold this, I added actually 1 position here after this no demand confirmed in this stage here on the 15, but this is also area for intraday selling. Again, keep in mind it's a Friday, so I don't know how much it can drop. Yes, it can drop still 50-60 pips lower or something like that. There is also 4 or 5 hours left to the London close and so on. But that's the general rule, and much more about and much more explanations in what I'm using in my analysis and how I observe, you can find and you can learn in my mentorship program. So again, one important thing is the very important thing is the timing aspect of timing. So if you enter position, if you, for example, enter position, let's say I sold here and I see there is no progress the next day, or I see the price struggling, something is wrong there and the timing is not good, which means because I got a good progress since I established the positions, I have confidence and I know that I'm on a good way, and this is on a good way to be totally to be a very strong distribution due to this massive volatility from yesterday. And the professionals will for sure use this to sell and earn a lot of money and try to take, let's say on this way, they will try to take very good rewards compared to risks. This is why these kind of conditions are the best to trade. And pretty much most of the banks, most of the key banks in the world, like Goldman Sachs, Deutsche Bank and so on, in their trading floor they focus, when they do trade FX market, they trade just when they see some large, extremely large volatility, and there they try to position themselves and have some very strong positions, which can bring them, for example, rewards something like 1 to 10 risk rewards, 1 to 15 even, 1 to 6, 7. So compared to risk, they can earn and catch good money here on the FX. But one thing is for sure, there is no any large professional trader or hedge fund even consider it seriously, because who will actually trade low liquid markets? There is no point to trade low liquid markets when there is nothing big happening, you know. So keep in mind that all the currencies pair and everything which is going on the average volume or volume below the average, or there is no anything big there on the price action and activity, it's not interesting for any serious trader, hedge fund, bank, call that how you want, but let's say the smart money or the strong holders money. Okay, once we have something massive, that's a big warning for every hedge fund and banks to pay attention on this, and then they read activity, price action, they position themselves. They pretty much, they won't fight. Again, you must know one thing: traders who trade on the news or trying to catch the pre-position the news and don't close position before the news, you know, so even, you know, letting the stop loss open and stuff like that, that's incredibly and insanely risky, and that's more gambling. So trading during the news or just before the news, or you know, trying to pre-trade news to catch the news effect, it's a gambling, and this is created basically. This maneuver take off like 80% of the traders because they want to reach overnight, trying to think that they can reach overnight and benefit from that news effect. It's actually gambling. You must know that it doesn't matter what the news, what you see on the news. Look at this example. You have the cut rate, which is generally fundamentally weak for euro, cut rate weak for currency. And then you have expansion in QE program, let's say that way, which is actually good for the dollar and weak, which will more weakening the euro. And the first reaction in the first few hours, look at this, first 3 hours, like 350 pips higher. Now you wonder, how is that? Fundamentally, we got a massive you know, very strong actually, so cut rate and so on, because it was surprise effect. Pretty much this was a surprise effect for most of analysts. They didn't expect this this from the ECB, and their first reaction was, okay, what to do, you know, let's press buy, let's buy, you know, the crowd is also surprised because of this, and they say let's buy this, something is wrong, you know. They didn't expect this from the ECB in this meeting, let's say, on this interest rate decision. And because of that surprise effect, the news which are actually bad for euro, the first reaction for that first day, the day of the news, which was the yesterday, the first reaction was massively upward due to, again, fear because of that surprise news. But actually the real thing in the background is absolutely, it's a very bearish. The buying climax actually confirmed that on the volume spike, the ultra wide spread of the bar, and later on price stabilized and found the resistance, and that's the area where the professionals will start to establish selling positions. Again, they will start to establish, this is not it's a starting point. The first selling orders triggered pretty much where I triggered yesterday, around this stage here. Now, how the price progress, we follow the, if the price progress good, that's mean that we are right and that we're going good. So you can add after some rallies, after some upthrust, no demands or something like that, you can add as long there is no strong sign of the strength opposite or some big signs that you need to actually scale out some positions. You can let some, scale out some, or you can make decisions of managing later on. But the point is absolutely don't trade during or before the news, large event, especially interest rate decisions, which is the largest news for FX on FX market. So again, the reason you see the GBPUSD, for example, right now. So I can let the GBPUSD till end of the day, but this GBPUSD will for sure will not go too much at all. Why? Because we are waiting, and professionals and banks are waiting the interest rate decision for United Kingdom. Makes sense. New Zealand dollar is trading sideways, and again, we'll see how will this progress. So far, I'm very good plus here. I'm already 1-2 ratio on 2 positions, so actually it's totally 1-4 ratio, which means I'm 2% already in plus on my first selling positioning. I can absolutely hold this transaction as all the way before the interest rate decisions for US, and I can hold as long there is no big sign of strength, and that I can earn. We don't, we never know how much we can drop, how much the public will rejoin selling when they see that they're wrong. They must reverse the buying positions they established here, and once they start to reverse, I mean, by when I say them, I mean on the crowd. Professionals already sold, but when the crowd starting to reverse at these points where they're building buying positions, when they see that they're very wrong and price is going lower and lower, they will join the sellers, professionals who are already pre-positioned at very good levels, and then create massive supply, because when professionals and strong holders gather with weak holders and with the public crowd, they create a massive supply which can actually absorb all the buying climax, actually, or hold this bar in the next days. Okay, that's how you see the absorption. I'm just explaining you the absorption progress. Again, this is about the basics about absorption. So you have the massive buying here due to the news. I explained to you more about the news in the previously. So they buying. Professionals know that weakness appears on the up bars. They know that we got the cut rate, that we got actually very good things for very good things for selling the euro, and they wait price to stabilize, and then they start when see that there is no demand, there is no further progress from the buyers. It's a very simple. If there is a serious buying here, how we can see the weak demands later on, even on the Asia session, and Asia traders will not join that buying. Pretty much it's because there is no professional buying at all here. Actually, professionals are selling there, and they started to sell. Okay, professionals started to sell, we got a good progress. Now what the professionals are doing is pretty much when they see the good progress, they will add step by step, they will add positions. They will add every day, each day, if they see the still valid everything, there is no big sign of the strength in the background. So it's as long as it's still this statement is still active, they will just add. Okay, so they add this and push. So let's say they add let's say that they add like I added here on the no demand. Okay, they add here, they add, for example, here. Let's say some of the traders add here, and they're adding to more selling, bring them more supply. But let's say when we will see the total absorption, when the buyers who are buying at this stage here, so the crowd which buying here, when they see that they are wrong, when they take the loss, they will naturally reverse their positions later on or immediately. Basically, when they reverse this massive their positions, what they actually do is they reverse even with more than they bought, and that, together with already professional selling, bring the strong supply, which can absorb totally this. Okay, and that's how the market pretty much works. You know, we have the news on the market, we read the volatility, we read the price action volatility, and we're trying to see where are the strong holders' money, where are they. Okay, once we see the good progress, we follow that good progress and adding into the winning position, and on that way you earn a lot. But if you add into the bad position, you actually are doing very terrible. You know, you're adding into something which is going bad. That's totally wrong. So for example, just example, I can earn in this, adding in this my positioning, I can earn about 5-6%, you know, pretty much. Let's say that I lost like 3 times in a row. I lost 0.5, or let's say 1%. I lost a 3% in, I got bad setups, I tried something and it didn't work. But then when this happened, when you did manage properly, when you recognize the strong, you have the patience to wait and add positions, you can earn a lot of percentage with good positioning and good observation of the market. So keeping the risk low, not adding into the bad positions, cutting the stop loss, or if something is bad, it's actually the key for success. You must know that. It doesn't matter how many times you will lose. You know, you can lose 5 times in a row, but if these 5 times of negative setups cost you 2 to 3%, and it's nothing, it's still okay, it's still normal, so you don't need to worry, because the next good opportunities, if you manage correctly, you can earn much bigger than you lost. And that's the key point in financial market. You know, even though your percentage of winning setups can be even 40% or 30%, but if it's your risk reward ratio like 1 to 5 in average, you are still in good plus on the account. So it doesn't matter even the winning, the percentage of winning transactions. It's matter how much you earn when you win in your winning setups, and how much you lose in your bad setups. That's pretty much like that. Okay, I hope you enjoyed that. This was more like some deep explanation. That's more extended explanation about what's going on in the market, and I hope you enjoyed. And again, if you want to start my mentorship program, just add me on Skype. We can start cooperation. I'm pretty much free right now to do the mentorship program, and that's it. If you like, feel free to comment, and I wish you good trading, and see you next week.